Hey, what's going on, everybody? Today we're looking at XLM. So I haven't done an XLM chart, and the reason is pretty simple because XRP and XLM, they're literally brothers and sisters, right? Brother and sister. So the chart is basically nearly identical as far as wave structure. I mean, obviously, they're different in terms of percentages and things like that, but as far as the wave structure goes, it's pretty identical. So basically, looking at XLM, same thing with XRP. Starting at the beginning here, we had this sort of ascending triangle in here, and I'm looking at the same thing in here. And basically what this is just a base, right? So the base is starting out in the beginning of its life, right there. And basically, price oscillating in this base, and then we shoot out, right? So you have your foundation. I've shared this on, multiple different charts. You have your foundation, right? Your solid concrete foundation. You have your oscillation in here, and then you have your breakout, your flagpole, right? So your flagpole is planted in this sort of this base, right? Then you have your crash, your retracement, and now you're in reaccumulation. So what you can see is, basically similar to where we are now. So, for example, this is a fractal that I took right in here. And if you just overlay it, it's not perfect, nothing is ever perfect, but it gives you a sense, an idea of sort of where we are in this move here. So you can kind of play around with it a little bit, but essentially, there's a few different things that could happen, right? And I'll go over those things, and we'll see, which one has the best probability. So basically, the most bullish count, or the most bullish scenario, would be this scenario here, which is just a replica of this right in here, right? Same thing is happening on a much bigger scale, though. So, for example, you have your. So it's kind of weird because Coinbase. I'm not sure if this is a good chart to look at, but I'm just using Coinbase. So you can see this rise. You have a crash. You have a retracement. Right, and then you go into reaccumulation, a long reaccumulation, and then you're developing your base. And the base, you can see, is higher low, higher low, higher low, higher low, into the resistance, into the resistance, into the resistance, into the resistance, and it just hits it. So 1, 2, 3, 4, 5. The more times you knock on the door, the more likely it's going to break, right? So we broke above the resistance, and at that time it was not even a penny, right? 0.002 cents, so basically nothing. And we accelerated all the way up to about 6 cents, which is a monster move. If you look at that in percentage terms, I mean, this was really the time to get into crypto right here. It would have been life-changing money, and then you would have never had to worry about it again. But I would say 99% of the people who got into here probably sold early, or they didn't sell at all. And then also 99% of all people in crypto probably never even got a chance to get in here. So for me, I got into crypto in the summer, like late spring, early summer of 2017. I was on Facebook. And I kept scrolling and I kept seeing Bitcoin this and Bitcoin that. And I'm like, what is this? What is this? I kept seeing people make money and things like that. So I said, you know what? I wanna jump on there. So what did you do? What did everybody do? Right? Well, for me, I jumped on Coinbase and I bought myself some Bitcoin. And at the time, there was only 3 coins on Coinbase. So there was Bitcoin, Ethereum, and Litecoin. And I purchased like 80% Bitcoin, a little bit of Ethereum, and some Litecoin. So I was pretty balanced out, mostly Bitcoin, and then I rode that all the way in from that late spring, early summer, all the way to Christmas, right? Which would be, this isn't Bitcoin chart, by the way, but same thing, right up into here. And I remember that day because I was in Vegas at the time, and it's kind of funny because I don't gamble or anything. We were just there, just to have some fun. And I go, I don't need to gamble because I won. Like I was thinking I won it big, and I didn't really take charts seriously. I mean, I was in some trading groups and things like that, but I didn't really take it serious until the bear market started, right? That's why bear markets are more important than bull markets, because bull markets, right, you make your money, but bear markets are where you prepare, right? So think of it like, I don't know, like a bodybuilding competition, right? So bodybuilders are, the whole point of a bodybuilder is to work out, right? So you're working out forever, and then that, you're working out forever, and then that 5 minutes on stage is that big breakout, right? That's your euphoric moment where you get to showcase all the work you did. So basically, bear markets are what work is, right? So you go to work and you prepare, and bear markets are where you learn. They are where you're planning and you're figuring out what you want to do, right? So for me, the biggest bear market I remember, right, was from 2018 all the way till COVID. So during this whole time, that's where I buckled up. I really learned how to trade. I've learned technical analysis as the best as I can. I'm still learning today, right? It's never an ending process. There's always something more to learn. But looking at charts basically every day since 2017, 2018, you start to remember patterns and remember, oh, I've seen this before. It did this, and then it sort of did this, right? And you sort of recall experiences you've had in the past, and a lot of trading is just memory, right? Remembering what happened. And a lot of things that recall your memory is fractals. So for example, this is a fractal of this area here. So, and then also, it's never 100%, right? This is definitely not financial advice. I could be totally wrong. This thing can go to $100, or it can go to $0. I have no idea. I'm just interpreting the data the way I see it, and formulating opinions and ideas of what possibly could be. And so basically, when going back to that story, when I was in Vegas, I came home and we were like dumped massively, and I'm like, oh man. And when I felt that pain, when I felt that loss, like, why didn't I sell it? I had the chance. That's when you're like, okay, I gotta figure this out. I gotta figure out how to preserve my capital. But it's the same thing as being a hodler. But even if you're a hodler, you still want to take profit, right? So let's say you're buying in here, buying in here, buying in here. We get this move to the upside, and we're all the way up to the top. You're not going to just hodl all the way down, all the way retracement, all the way. You're going to want to take profits, right? And you want to be conservative about it, because if you have if somebody on the internet, on YouTube or wherever, Twitter or whatever, says, you know, there's a price target of, you know, $7, and everybody's believing it, $7, chances are it's not going to hit $7 if everybody's saying that's what it is, right? Chances are it either will exceed it or it will fall short of it. So oftentimes it falls short. So people are waiting for that $7 mark, but then what happens? It doesn't come, right? And then they hold the bag, and then they have to deal with another multi-year bear market, right? And then, but here's the thing, taking profits is not easy. You know, for me, the easy part is the bear market. The hard part is the bull market, because that's where I start getting, you get nervous, you get anxiety, because anything can happen. When things start pumping up massively, euphoria rushes in. That's when you know, okay, something's gonna happen, right? So, you know, is this it? Is this the top? Is this the top? The next day it pumps again. Is this the top? And then it's like, you know, you take some profit, and then it continues to rise, and you're like, man, why did I take profit? Because that's what you have to do. You're never in a situation where you go all in at the bottom and then you go all out at the top. That's like, it never happens. It's all about DCA, your dollar cost averaging in the range and your dollar cost averaging on the way up. You know, so you want to, you know, that's why we use Fibonacci tools as well. You want to at least wait for that 1.618 extension from a move, right? And typically the biggest euphoric bull runs go into their full 4.236 Fibonacci extension, which, by the way, I believe full-heartedly, I could be totally wrong, but I believe XLM will hit the 4.236 extension. And what is that price? Well, I'll talk about that soon. But going back to the chart, basically, like I said, we're in a bigger pattern of this. So you have a rise, you have a crash, you have a rise, you have a crash, you have a retracement, and then you have reaccumulation. You have a retracement, and then you have reaccumulation. And then you go into sideways reaccumulation, which is just consolidation, right? You're consolidating inside of a base, inside of this reaccumulation, right? So same thing here. You're going sideways in a base in reaccumulation. So this is one idea based off the fractal. And what you can see is the fractal. So the thing about fractals is, so back here when XLM, you know, was not even a penny, the market cap was a lot smaller. So it didn't require a lot of money to move the price from all the way down here to all the way up here. It didn't require a lot of money. So that's why you can see this area, this sort of accumulation area, is much smaller than this accumulation area, because it's requiring more time, it's requiring more correction, it's requiring more money to move the market, right? It's like jumping in the ocean versus jumping in a swimming pool, right? If you're looking down, you can see the swimming pool splash, but in the ocean, you can, it's like not even a blip on the radar. So so as far as percentage terms, usually the first big bull run will never exceed that percentage term. Typically, now it depends. Like if you look at Dogecoin as a good example, I believe it did exceed its percentage terms, and that's a meme coin, right? So if we come down here, we go all the way to the top here. That was like, we'll say 56,000%. That's insane, right? So if we do that same thing here, and we say, okay, it's 56,000%, we're gonna go up another 56,000%. That's $52. Do I think XLM's gonna hit $52? No, I don't. Maybe in the next 20 years, maybe in the next 10 years, I don't know. But I don't think it's gonna hit it this coming run, not even close. like XRP is not even going to hit that. So how would XLM hit that? But that doesn't mean you can't get massive gains on XLM. So this fractal pattern has it going to about that $6 to about $3 to $6, which is a good amount of money there. So if you come up here and you're buying, that's about a 4,000, maybe between 4 and 5,000%. That is amazing. That's an amazing percentage term. You're not going to get the same as, you know, the first bull run, but it's still an incredible amount of money. And remember, we're still in speculation. This market is being driven by speculation. When we get regulation, then it's going to be driven hopefully by utility, because these coins, believe it or not, are not just for people to get money off of. They're basically there for a purpose, right? So for XLM is payments, right? Same as XRP is it's a payment system. And there's different coins for different things and different blockchains, layer 1, layer 2, DeFi, this, that. There's applications involved. And these applications are not fully mainstream yet, right? So, you know, you don't see like a lot of the, you know, like Walmart and Amazon having full-on blockchain application. Not yet, but they're in the works, and they're trying to figure out, you know, if you're a multi-billion-dollar company, or you're a processing or whatever, you're trying to figure out, how can I utilize crypto? And for like a good example is VeChain. That's a tracking system, right? It's basically, you know, tracking, and tracking helps preserve product. It helps save money and things like that. But I digress. I'm going off base here, but you see what I'm saying, right? So basically that's the bullish idea, right? That's the first bullish idea. What else could be happening here? Well, let's do the ultra bearish count, and we'll get that out of the way. I don't think this count is going to happen, but let's just say, we have to say it, just, you know, to say we hit it. So, and it's not even really perfect. It's not perfect at all, but it is definitely a possibility. So we had our 1, 2, 3, 4, 5. We have 5 waves to the upside, and then we go A, B, and now we're in C. So the question is C finished? And it doesn't look like it is finished if it is some type of C wave. I mean, it could be, but typically C waves have 5 waves. So I would say that this would be 1, 2, and then remember, the third wave has 5 subwaves within it. So that would be 1, 2. All of this is 3. We're in wave 4 now, about to get wave 5, which would come down here and take out this liquidity and sort of fill in some of these gaps. So I would say between I would say maybe between 3 and 6 cents. It's hard to see, you know, it's subjective on where you put the channel. There's not a lot of, the problem with this is there's not a lot of touch points on the bottom, right? So in which case you would use Fibonacci. So let's see if we can get a target here. So I'm going to take it from the top down to the C19 low, and then all the way back up to the retracement area. And then you want to look maybe about the 886 or the 786, even the 702 area. So I would think right in here, somewhere in there, would be a good area for that C wave to finish out. So once again, you have 1, 2, 3, 4, 5. That's wave 1. This is wave 2, which is A, B, and now we're in the process of C. Once we get that C wave, maybe develop a little base and then continue higher, back test the top of this, and then continue rocking it to the upside. Now remember, the bigger, and this is just creating a bigger base, right? Just like here, it would be the same thing as here. So, you know, the bigger the base, right, the higher in space. So if we do come down here, I mean, it's possible. And the way this would happen, right, is if the stock market continues to crash, Bitcoin continues to correct, continue going down, right, the dollar continuing to rise. So if those three things happen, then yes, this scenario is very, very likely that we could see something of this magnitude coming down even further, right? A lot of people, you know, were bearish for a long time. A lot of people are starting to flip bullish, right? You know, when you go into retracement levels, that's where people start, you know, changing their minds and things like that. So definitely possible we can come down here. So do I think that's going to happen? Like I said, it depends on Bitcoin, the stock market, and the dollar, right? Because if this was a utility-driven market and it was based on utility, then it'd be a different story. But since it's all speculation, you know, since there's no regulation, then anything can happen. Anything can happen. So that's the ultra bearish account, which in the end is not bearish at all. It's actually macro bullish. It's actually incredibly bullish because obviously, you know, you have this impulse to the upside and then you're correcting to the downside, right? Anytime this happens, it's only a matter of time before you break out. But in that sort of unknown area, there is a lot of oscillation. So right now we're at 12 cents. Maybe we hit up to 18 cents and then we come down to 5 cents. It's really hard to know. But at the end of the day, we have to look at one thing. This is an uptrend. We're basing out, leveling up. Basing out, leveling up. The question is, when do we level up? Are we finished, right? So taking everything off the screen, that could be one situation. Another idea would be that this is already finished, right? You have 1, 2, 3, 4, 5. You have A, you have B, and you have C, or right, or maybe it's a WXY where this is 1, 2, 3, 1, 2, 3, 1, 2, 3, right? And now we're just doing a 1, 2, 1, 2. And the reason I'm bullish at the moment is because of this down in here. So if I mean, first of all, we broke above this downward resistance line. I mean, you could put it there. I guess right there would be a little better. Right about there. So you could see resistance, 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 resistance. We came down. Notice this wave to the downside is getting shorter. So this is a bigger one. It's getting a little smaller, and then you come and you go sideways, and then you drop down again. And notice how it's getting, the waves to the downside are getting smaller and smaller, which means sellers are getting exhausted, right? The price to the downside is getting exhausted. So we even go sideways a little bit here, and then we drop down. By the way, this is the weekly chart. Each week, each candle represents 7 days of price action, so it's quite a bit of time. We broke the downward resistance line. We came down. We had this bull flag here. We back tested it. We marked up again, have another bull flag, marked up again, have another bull. So what we call that is actually a 1-2-1-2. So this potentially could be incredibly bullish, where this is a 1-2, 1-2, 1-2. Usually it's a 1-2-1-2, and then boom, you go higher. But this is actually a 1-2-1-2-1-2 potentially, right? In which case you would get a monster wave 3, 4, 5, 4, 5, 4, 5. Right? If you have a 1-2-1-2, you're going to have a 4-5-4-5. So that's a scenario, right? And that would be you know, your third wave to the upside. I don't know, you know, how far it's going to go. It's hard to gauge a 1-2-1-2. We could throw on well, first of all, we got to get above these Fibonacci levels, right? So if I'm taking a little trend here, I want to see this 1-2-1-2 get at least to the 2-6-1-8, at least, if this is going to play out a 1-2-1-2. If it's not, and it's just a regular impulse, then looking at 43 cents. Or around the 1-6-1-8, which would be this area right in here. I think we need to get into these retracement levels, right? Once we get into those retracement levels, that's when things really, you're going to totally tell the difference. Like if you think things are exciting now, you have no idea how crazy people are going to be when we get into those areas, because that's where the big decision comes. Do we come up like this and come down, or do we come up here, play around in here, and then we break out? So anything can happen in this area right in here. So if that's the case, if we do come down, then I would look at that as a WXY, right? 1, 2, 3, 1, 2, 3, and this would be just a larger 1, 2, 3. But the problem is this wave is not proportional with this wave. So you got to have proportionality, right? So I'm thinking if we do make it up there, I think we have a very good chance of breaking it to the upside. Now, that bearish count I was talking about earlier, if that was to play, then you would want it to start, you know, maybe pop up a little bit more, but you would really want it to start happening now. If we get way up here, then it sort of invalidates the wave count, because then the waves are overlapping each other, right? So if wave C has 5 waves, 1, 2, 3, 4, 5, the fourth wave can't come all the way up here to this wave right here. It would be overlapping, right? So that's a no-no. So that's why I'm thinking we're at that crossroads at the moment. So and by the way, like I've said, if you let me go to the daily chart and I'll show you another reason why I'm very bullish. It's a very bullish pattern. So this is, let's see if you know what this is. This is a monster falling wedge. So we broke out of that falling wedge. And typically when you have a falling wedge, you make it back to the top. That's usually the target, is way up there. So as it stands right now, depending, you know, if the Bitcoin stays healthy, the stock market stays, you know, relaxed and not crazy volatile to the downside, and the dollar isn't rampaging to the upside, this is the target right here. Now, not the full bull run, massive, big target everybody wants, just this pattern, which would be the previous swing high of that 77 to 80 cents. So we'll just say 75, 80 cents. So that would be the idea. And if this is a 1 2 1 2 1 2, we can easily start making it up here before we have maybe a correction, and then we continue on that final blow off top, and that would sort of complete the bull run. And remember, here's one of the most important parts. XLM did not have a bull run like Cardano and Dogecoin. Those coins had monster bull runs. XRP and XLM are the same thing as far as what they did. And what they did was take the long way home, right? The long way home is the more bullish idea. So basically, most coins did this. They had their 2017 top, they had their bear market, and then they went up into an all-time high, and now they're in their bear market, and maybe they're retracing a little bit. That's all the coins right there. What XRP did, or sorry, what XLM did and XRP is, you know, we had our 2017 top, we had our bear market, we came up, instead of going in an all-time high, we had a retracement, which is just furthering accumulation. It's furthering the base, right? Then we had reaccumulation, which is furthering it, you know, even more, right? And now we're in this other accumulation area, and it looks like it's setting up for higher prices. So XLM looks incredibly bullish, equally to that of XRP, if not maybe even more, right, than XRP. If I put XRP on the screen here, I mean, you can kind of see what I'm talking about. Let me get rid of all the drawings. So basically, they look pretty identical, you know. Yeah, they're brother and sister. I mean, what more you want me to say? So we have, this is linear scale, by the way. I don't like looking at linear scale because the way the proportionalities, it's hard to read. So on the shorter time frames and the stock market, things like that, yeah, linear scale is great, but log scale is the best for hodlers, macro investors. So like I said, we had this big top, we're in this retracement, which by the way looks to be like a cup and handle. So you have your monster cup and a monster handle, and I did the target with XRP. I can do the target with XLM as well, but better than that, I'll just pull up the fibs. So yeah, basically I'm bullish. I mean, you can see here, see this impulsive move, and then you have this correction to the downside, and then what happened? You broke out. Same thing here, you have this correction to the downside. What's happening? We're breaking out. So we're at the equivalent as if we were like right in here somewhere, right? So we still got a ways to go, and I consider this to be, you know, still a good area for DCA. So let's talk about the short, the smaller time frames, and then we'll go into the targets of the whole bull run. So let's check out the daily real quick. So right off the bat, I see 5 waves. 1, 2, 3, 4, 5, maybe some type of diag. Now we have this move to the upside. Is it just going to keep going up? No, we need pullbacks, right? So where could we pull back to? Well, a good target that I see is the back test zone, right? So that would be this area right in here. So around 11 cents. Right in this area, yeah, right about 11.5 cents. So yeah, we've been steadily inching our way higher. You can even see 5 waves in here. 1, 2, 3, 4, 5. I mean, maybe we get another high, but ultimately we want to see an A, a B, and then a C, right? Coming down to back this area before marching higher. So that's the way I'm looking at it. If we wanted to look at this bearishly, then you don't, I mean, obviously you would take out this low right there. So that's the low we want to hold. We want to hold 10 cents. If we start breaking below 10 cents and then 9 cents, that's going to be bad, because then it basically invalidated the whole structure, basically the last year of price action. So since the start of 2023, literally that was the bottom, right? So we had a 1, 2, 1, 2, right? 1, 2, and that's been developing basically the entire year. So if we break structure, then the entire year goes out the window. It goes down the drain, which would suck, which would mean that we're most likely following that other bearish count, which means we're just going to have to wait and wait and wait and wait a long time for the next bull run, right? But it will come eventually. It's just all about timing, right? It's what everybody's time horizon is different. Everybody's risk tolerant is different, right? My time horizon has been as long as it takes, because what else are you going to do, right? I mean, what are you going to do with your money, right? I'd rather have it in crypto waiting and brewing, right, than sitting there doing nothing. So yeah, I think we're in a good spot here. And then you can start to see sort of this Wyckoff accumulation area in here, which this is our base. And this is going to be my main point of this video, is this base right in here. So because we developed it, right? So for example, if the price, you know, had its retracement, and then it went down, and then here's the bottom, and then it went to the bottom, and then it shot up instantly, that would scare me, because this means there was no base. There was no base. There was no accumulation. This right here, this box of price action, tells me that people are accumulating, right? If the price falled and instantly reversed, that tells me that's a V bottom, right? But also that looks like a retracement before massive downside. So basically this is a dead cat bounce, right? But what we're witnessing is not a dead cat bounce, because we are in this incredible accumulation base. And in this base, we have a 1, 2, 1, 2, 1, 2 potentially, right? So what's the goal? The goal is to break above, I mean, we're right there, 13 cents, 15 cents, and ultimately take out this wick of 19 cents, right? So taking all that off, that's the goal. Let's break above that box, and we will be on our way. We will be on our way. If we break below this box, then it's not going to look good. So we have a little bit of wiggle room here. It's not like we have to know the answer right now. There's no reason to, right? Unless you're trading and you need to know, then that's what you got to figure out. But for this is, you know, investing, right? You're buying XLM because you believe in it. You believe in its utility value. By the way, I hold XLM. XLM is one of my biggest holdings. Definitely in the top 5. Or actually, no, it's in the top 3. It's one of my biggest holdings. So I want it to do well. And but also I'm a realist, and if we do start breaking structure, that doesn't mean I'm going to sell everything and leave. I'm just going to have to wait longer, right? So now that we discussed everything, right, we saw the falling wedge, and now we're sort of developing maybe this broadening pattern a little bit. So I mean, you can argue A, B, C, D, E, right? And then we're marching our way down. But I don't think that's what's happening. I think this is more accumulation. And what you can see also, which I didn't mention yet, is this trend line here, which is a inverse head and shoulder. So there's your left shoulder, there's your head, and then there's your right shoulder, right? So we broke out of that already, and I believe we already met that target. So the measured move of that head and shoulders from here to here, and then I take it from there. Yeah, we actually exceeded the target. So we already met the target, right? So the idea now is if we come down and we do, so let me do. So one way this could break the low and still be bullish, if we break that low, we could still technically be bullish, because what could happen here is, so you have your inverse head and shoulders, right? You break out, and here's the neckline right here. This is the neckline of that inverse head and shoulders. So we broke out. You have an A, we're coming up for B, and then we come down for C, and we tag that neckline sometime maybe next year. So we have this big impulse to the upside. We have a correction, A. Now we're in the B wave, which is retracing this A wave. So a B wave is just retracing the A wave. So A, B, and then we're going to go into C, and we're going to tag this neckline, which is the back test of this inverse head and shoulders, which, by the way, the target was already met. And then we can accelerate to the upside. If that's the case, then we're okay with breaking that 10-cent area. So we can come down to 8 cents. We don't want to break 8 cents, whatever we do. So in this scenario, it's okay if we break 10 cents because we're just, in a massive ABC. So zooming out to back to the weekly chart, that's what it would look like. And when you look at it, it looks nothing. Like, it looks like, okay, we're still, right? We're still in our accumulation box, and we're still relatively bullish. And in which case, this right here would be the spring. So we have our first test, our second test, and now we're in the spring, right? We're in the spring phase. Once we hit that spring phase, or the creek, or whatever you want to call it, then we can accelerate to the upside and be on our way. So those are the options right there. So you have your ultra bear, you have your conservative bull, and now you have you had your ultra bull, and this is more your conservative bull, right? So like going back to the 1-2-1-2, and if we can get out of here, so it really depends on the B wave right here. So this wave right here, the wave we're in right at the moment, if we can get above the A wave, then it invalidates it, right? If we can get above. But if we start going down and then breaking this low, it's not the end of the world. We're just probably going to back test the neckline. If we break above 16 to 19 cents, actually, let me get the exact target on here. So if I pull this here, I'm going to pull that right there to there. So we want to get above this area right here. So if we crack that, then that scenario of coming down to back test this neckline, right, is off the table, right? So what I want to happen, what I hope to happen is this is a 1, 2, 1, 2, 1, 2. Then we break above this, play around, and then we continue to go. That's option number 1. Option number 2, this is an inverse head and shoulders. We broke the neckline. We broke out, hit the measure move, impulse to the upside, 5 waves, and then we have A, B, C. So we could still come up even higher, A, B, C, come down here and retest this downward resistance line before marching higher. So those are the 2 options that I'm looking at. Those are my 2 main ideas. And then obviously the ultra bear, right, would be if the stock market just collapsed on itself, which would be an A, B, and then a C, in which case, you know, we would come down somewhere in here. But that's at a later date. We don't have to talk about that until the day comes where we start breaking this 8-cent area. So if we stay above 8 to 10 cents, we're good. We could break below 10 cents, back test this neckline, and continue up. Okay, so apologies the video got long, but, you know, never covered this coin. I want to try to give you as much information as possible. So now let's talk about targets. So if I pull the Fibonacci target, and considering we're all bullish, and we break out, the target would be a full 4.236 extension. So obviously the first target would be the 1618 and the 1702. So right there. The second target would be about $3.94. So right in here. So right in there. So that would be your ultra bull count. And can I go higher than that? Of course it can, right? If I flip this to log scale, we're hitting that 1.414, right? So if I pull this to log scale, I think the most bullish scenario for XLM would be to hit $8.76. So between 8 and $9. So my first target would be probably $1.70. My second target would be about $4.15, $4.20. And then if we're lucky, we can hit that $8.75 area. So basically those are our targets, and it doesn't look that crazy. I mean, looking at this chart, it doesn't look that crazy at all. I mean, obviously, right? You have a 1, 2, 3, 4, 5, A, B, C, and then maybe, you know, if C is a flat, right? It's a flat C. Then we have this 1, 2, 1, 2, 1, 2, 3, right? We make it up to that first target. 4, 5, 4, 5, right? And we start creating divergence on the RSI, right? Which is like, you know, you have the RSI going down, you have the price going up. So right in here, that would be the goal. So, and it looks uniform, right? Everything looks uniform. You have this impulse to the upside, correction to the downside. Now we're waiting for the next impulse to the upside. So everything is lining up for XLM. It just needs a couple things to remain healthy, which, by the way, is the stock market and the dollar and things like that. So thank you guys for watching this video. If you can, leave a like and a comment, and I will catch you on the next video. If there's any charts you want me to take a look at, let me know, and I'll see if I can get a chart for you. I know somebody requested XLM, so here you go. You got a 50-minute video to digest. So hope you guys found it useful, and until next time, have a great week.